Welcome back to the channel. I'm Sam Morton. It's Wednesday, October the 22nd, and the market finally decided to remind everyone that gravity still exists. After spending the last couple days quietly compressing under resistance near the highs, the former highs, the SPY opened the session with a sharp drop, nearly 90 S&P points, and then they found some footing and staged a modest recovery. So was that a surprise? Not at all. We've been talking about the potential for a deeper pullback ever since this bearish consolidation began to take shape, way back on October 10, almost 2 Fridays ago. You can take note of the levels that we were working with this morning, and in the game plan, we pointed out that timing was becoming critical. The market appeared to be sitting right on the edge of something larger. There was a zone between 674.32 and 674.79 that kind of marked possible overhead resistance, or like a bullish breakout could happen if momentum cooperated. But a more possible outcome was the opposite, that the bulls would fail to reclaim those highs and we'd see the bears take another swing. And there was no formal access level for the day, although 671.13 was identified as an important reference, one that the bears would likely need to get below to push the market lower. And the plan was pretty simple: just focus on precision, manage risk, and only engage when price behavior aligned with the structure. And I'm talking about the rules that we use to trade the E-mini futures. Feel free to read through this game plan, pause the video if you need to, and you can take a note of the screenshot of the 1-minute chart with the levels plotted before the opening bell. Right out of the gate, price fell sharply. May have tested your discipline and mettle, but it proved once again why having a rules-based approach matters. The first official trade came as a long trade at 671.13. After giving the market 15 minutes to settle in, price bounced quickly after that window opened, and that trade produced a textbook 4-point base hit. Next trade prescribed averaging in between 669.69 and 668.27. That is per the rules, same number of contracts at each level. So this combined position, this blended entry, produced another base hit as price rebounded pretty clearly and cleanly off that lower level. So that's base hit number 2 and 3, 2 levels. There's a potential short trade over here at 669.69, but I'm not going to count that in the tracking log, this recycle attempt here, because they had already reacted here and there had been enough time. So for me, that was the recycle trade. And at this point, there was still a chance the bulls could get on top of this thing. So you probably wouldn't want to short the thing again. But they continued to fall, and the next official trade was a long trade, counter trend trade, as they bounced at 667.12 right here. Now, they got to a low of 667.15, but you know we have this 5-cent buffer rule, so you would have triggered the trade in the E-minis when the SPY hit 667.17, and then they bounced. Plenty for a 4-point base hit. And it was a pretty drastic drop after that. Got defended pretty well, shot price back up. Where did they go? Right up to 668.27. A recycle trade there, 668.22. There's our 5-cent buffer toward price. Hit it to the penny. The high was 668.22. So once that happened, a short trade in E-minis would have been triggered. There's your recycle trade at that level. They fell back down. They came back up. The last and 6th trade, in case you're keeping track, was a recycle at 667.12. They got back up into it here toward the end of the day. It was before our cutoff. We don't like to take trades within the last 30 minutes of the open session, even with a 5-cent buffer applied. So 667.12, pull it down to 667.07. And there was 4 points given in the E-minis. And the reason I know this, although I didn't take this trade, is because I was looking at this in real time, and I actually put some reference levels on the E-mini chart just to see what would happen. I did not take the trade, but they gave 4 points, like almost 4.5 points in the E-mini. So there's a little bit more reach and stretch in the E-minis than there was in the SPY. So I know this counted. But we can't count this recycle at 668.22 for 2 reasons. One, we already did it over here. And the second reason is it was after 3:30 p.m. So in the Eastern time zone, that's within 30 minutes of the closing bell. Not going to enter a trade at that point in the day. Altogether, 6 official base hit trades were available by the book. That's 24 ES points in total if each was managed mechanically. For my own tradings, I took only the first setup, the long trade at 671.13. I waited through the initial 15-minute settle-in period, went long with 4 contracts, and exited at target for a clean 4-point gain. Exactly by the rules. You'll see it happen right there. I did consider the deeper levels, but decided one discipline trade was enough. I had a hard stop at 11:30 a.m. anyway, so I did wrap up at 11:30 and headed out to meet a friend for lunch while the market continued its slide. And I actually felt better about the lower one. Like these 2 levels, I wasn't really willing to trade. As you know, they did work. It would have taken some discipline to scale in, but I was looking at 667.12. But after they bounced pretty cleanly at 668.30, it was getting near. Oh, also, there was another level identified in real time, just kind of a little bit of a zone here just to see what would happen. You can see I did not take the trade, but I was looking at it up until about here, 11 o'clock or so. And then I just stopped the recording and stopped trading at 11:30. So one trade for me. The tracking logs are pretty straightforward. We're on the playing by the rules log. 6 base hits, that's 24 points, and a not unsubstantial amount of dollars, depending on number of contracts traded. And then the Sam's trades, just the one level traded, 4 contracts, 4 points, $800 before commissions. Back to the daily chart. Today's drop confirmed that the bearish consolidation that we've been discussing remains in play. Pretty straightforward. The structure has not changed. So price will either break below this October 10, could take some time. So that would validate this whole bearish setup, or the bulls regain control by closing daily candles above 674. And that would negate this entire bearish consolidation. So they're in a big range. So bears made their presence known today, but what matters really is the follow through. So if they can extend momentum into tomorrow and Friday, Thursday and Friday, the tone of this market could shift noticeably. On the other hand, failure to press lower suggests the bulls are still quietly accumulating strength beneath the surface. This is a big area of overhead resistance that the bulls want to get on top of, but they have their work cut out, as we've been saying. So either way, tomorrow's pre-market levels posted for subscribers before the opening bell will provide new opportunities with the same historically strong win rate as long as we continue to follow the process. That wraps up the recap for Wednesday, October the 22nd. The bears made a move, the rules held firm, and the process did what it's designed to do. So until next time, stay patient, stay precise, and trade well. I'll talk to you again soon. Thanks for watching.